Hello and welcome, champions, to Financial Advisor Pro. My name is William Moon, and in this video, what we're covering is what is life insurance, how does it work, how to not get scammed by it, and what's the best type for your family.
When it comes to getting the right kind of life insurance, there's a big business out there in the insurance industry. It's a very, very lucrative industry. They can make a lot of money off of mine and yours ignorance, okay? And so the thing is, there's two main types of life insurance out there. There's a cash value life insurance. It's also named whole life, universal life, or variable life. And there's other kinds too, but I'm going to show you how these work. This is actually with the real family we were able to help. But of course, for their privacy and protection, we had to change their names, and so Bob and Susan here had 125,000 in coverage and 75,000 in coverage on both of them. And they were paying $262 a month for their life insurance coverage. With these cash value or whole life, universal life, variable life, index universal life type of policies, though, they come with a savings component attached to it. Okay, they come with a savings component attached where it's life insurance with a savings or an investment attached to it. Okay, but let me ask you a question. Okay, we call this our funny bank. If you walked into a bank and said, "Hey, I want to open an account," and the person at the teller is like, "Okay, I'm happy to help you open this account, but let me share with you how our accounts work." Okay, if you're gonna open an account with us, then any money that you put in for the first 1 to 3 years doesn't matter. You're going to have a $0 balance for the first 1 to 3 years. Is that a bank account you would like where no matter how much money you put into it, it's going to have a $0 balance for the first 1 to 3 years? That's crazy, right? That's why it's a funny bank. Okay. The second rule is, hey, if you were to take money out of your bank account once it starts accruing a balance, we're going to charge you 6 to 9% interest on money you take out. Is there any way I could convince you to buy this kind of bank account? Most likely, no, okay? But the last thing is, hey, if you have this bank account with us and you pass away, we, the bank, are going to keep your money. Is there any reason you would ever start a bank account with those three rules? Of course not. That's why we call it the funny bank. However, the FTC, the Federal Trade Commission, did an investigation on the life insurance industry, and here's what they found out how these cash value policies work, or these whole life, universal life, variable life, and index universal life policies work. Okay. For the first 1 to 3 years, they have a $0 cash value savings. Okay. Now, why is that? Because that goes as commissions to the agent and profits to the insurance company. So these are great plans if you're the company or the agent selling it. Okay. The rate of return that it gets, the average rate of return is only 1 to 4%. Okay, on your cash value. So that's very, very low still. Okay. It would barely be keeping up with inflation. Okay, and in their example of Bob and Susan's policy, by age 65, they would have had $40,000 in it. That's not a lot of money for retirement. Okay, so the other thing, the second rule, like I mentioned, you must borrow the money from the cash value. Okay, so if you're gonna borrow money, if you're ever borrowing money, whose money is that ultimately? That's not your money. That's the bank or the insurance company's money. Okay, so when we're borrowing money, we borrow with interest. Okay, and so you're paying 6 to 9% on essentially what kind of should be your own money. Okay, and so that's why it's also not a good thing. Plus, you pay for two things typically, and you only get one. And so if Bob dies, Susan gets a $125,000 death benefit, but what happens to the cash value savings goes back to the insurance company typically. Okay, or if they were to both survive, they get the savings, but they then have to surrender their life insurance. This is actually called cash surrender life insurance. Okay, it's cash surrender life insurance. And so that is very, very important. You do not want to build your foundation upon bad materials. Okay. And so the alternative to utilizing cash value insurance is a better, superior product called term life insurance. And so term life insurance, like we discussed in the previous part of this video, you don't need life insurance for your whole doggone life. It's just a small period of time that you need it. And so term or temporary life insurance, you don't need it for your whole life. And so in this example here, Bob and Susan, they got a term life insurance policy, And here they had way more coverage. Okay, $400,000 in this example, 250,000 on Susan, and they only paid $82 a month for that. So very, very affordable for modern day families. And so since they saved $180 a month, they took and invested that into good quality mutual funds. And at age 65, okay, they had over $300,000 saved. Okay, plus they put some coverage on their kids that they didn't have before and stuff like that. And so they were much more financially bulletproof. So if one of them passes away, then they're okay on the income side. Or if they both live, that's a much higher substantial amount of money to live off of at retirement age with other tools and things like that that you're going to learn about in future modules. Plus, one thing that I want to note too is that this life insurance is separate from the investments. So if Bob or Susan were to pass away, then the surviving spouse would get the investments, which is totally separate, company unattached. And so it's a lot better value for what you're paying for. And so, which option makes more sense to you? Obviously, the right hand side does, but most of the time, almost 70 to sometimes 80% of the time, these cash value life insurance policies are sold because they're more profitable for the agents. They make more money and for the companies, and they try and keep this on the down low secret because of that.
So, I'd like to invite you to go ahead and schedule a consultation to get your free quote today on our website. Thanks for visiting, and we'll see you on the other side.